Okay, everybody, Mitch here with your almost monthly market update. We absolutely have the goal of getting it out every month on time. Missed November statistics by the time they came out in December. We had a busy month there, so this will be a bit of a wrap that includes a look at what happened through November, where we're at in December, and a little bit of where we think things are going. This is definitely one of the more interesting times in all of the market updates that I've done, because last year, this time of year, we had this massive inventory squeeze, and everybody was really almost waiting on it to falter, and here we are in arguably the worst situation we've ever been in terms of real estate availability, affordability, the situation for housing across our entire population, not just in Peterborough but in Ontario. So let's start with a couple of the big key statistics, and then we'll just roll into a bit of macro talk, sort of macroeconomics, what I see that's going on, and just relaying to you guys a bunch of what I'm picking up in news articles, podcast, inferences from conversations with mortgage brokers, other realtors, business people, and then just a final little section on what to do next. So first off, November statistics were already painting a pretty bleak picture for where things were heading in terms of inventory and the continued appetite of purchasers to continue to move into this market and enter the housing market in Peterborough. And the months of inventory statistic, which, by the way, I've realized for any of the new audience that's picked up on these videos and hasn't been watching them from way back, it's been a long time since I've explained that, so I don't know if I'll have it ready for this one, but I'm going to do an explanatory video just on months of inventory. At some point in the future, I will post it up in one of these corners that you can click through to, and it'll likely be next week. There'll be a video coming out that's a little more in depth about what months of inventory is and why it's so important and how we use it, how we look at it. But what I can tell you about it is that in the month of December, we are in such a dismal state in terms of the inventory. When I logged into our system the other day, residential homes across all price categories in the city of Peterborough, only 11 listings. This is absolutely dismal. There's no other way to paint a picture about it. It's beyond, we've talked about the leading through this whole thing. People go, this is ridiculous. And as polite Canadians, we sort of look at it somewhat humorously in conversations, in and around the dinner table talk, or when I'm out with people, this market sure is crazy kind of thing. But the deep reality of it is that it's not good. It's not good for anybody. It's not good for anybody, and we're really in a trap here, and the government's in a trap. Everything, our whole entire system of incentives for real estate purchasing, and the barriers to entry to create real estate, to create new dwellings, and our sort of macro fundamentals about our rates of immigration and our rates of new construction, and the financialization of this market that we're in, and how much international capital is looking to land in Canadian real estate. It's really just not good. So I'm gonna go over the months of inventory here. We're at December, 0.3 months of inventory. That means that if no new listings came on tomorrow, it would only take a third of a month to be totally out of listings. So simply put, to think of, there's 11 to 15 listings active right now in Peterborough. It's absolutely dismal. It's not unusual for a city like ours in a more balanced market to have a few hundred at any given point in time. Red Deer, Alberta, similar size city, similar style of city to Peterborough over in Alberta. And last I spoke to somebody out there, they had closer to 500 residential listings, around the same population. So that gives you a sense of the amount of imbalance we're talking about here. And it has led to massive price increases. The average price in the city of Peterborough in December was $766,000. That's up 46% year over year. And last year, everybody was blown away at the prices. So we are on an absolutely runaway train. There is no way to visualize a smooth outro to this story right now. The prices and the affordability is detached so far from the incomes, and a lot of people are struggling in the city just to get into entry level stuff. And a lot of people from the GTA are feeling the same pressure, and they're coming this way. And even their incomes are starting to get to the point where they can't quite afford what they would want here. So basically, everybody has this feeling deep in their bones that they know that this is not right. This is not right, and where does it go from here? And that's the biggest problem, is that where does it go from here isn't a pretty picture either. We've got a government that who knows to what extent the real inflation is across the consumer price index, which is a varying basket of goods that's sort of always getting swapped and substituted, and the biggest movers in any given month are always getting chopped off to keep it as more of a smooth line. And nobody really knows what the real rate of inflation is, but it's all relative, because they can give you the consumer price index, which is this large basket of goods, but what do you buy? What do you buy on a daily and weekly basis? You buy food. Everyone's got to pay for their shelter, their rent, or their home. They need a vehicle, and they need gas, and all three of those things have really shot up in the last year. Lot of people's ballpark estimates and conversation about what their own monthly bills have increased. You hear it's not the 5% that they say that the rate of inflation is right now. It's more like 15 to 20. So that being said, what you got to realize is that your savings are dwindling daily. You're losing money. You're holding money in a savings account. You're losing money because the price of everything is going up quicker than your savings rate, or your interest on your savings is going up. So everyone is reaching for these life rafts, these inflation life rafts, to float up with this massive amount of, whether you want to call it inflation or currency devaluation. We have just a massive expansion in the money supply, whether it's all created by these low interest rates, or whether it's from the government programs that are going on right now. It's very hard to say, but what's most important is that the expectations that this government's going to keep coming in and stepping in and throwing money at any problem, no matter what happens, is baked into what's going on right now. So it's very hard to visualize a crash by which the government just doesn't double down and spend more, and do more to change and augment the rules to allow this to continue to expand and grow, and inflate. It's a very problematic picture in the long term, because nobody else wants to buy government bonds right now, other than the Federal Reserve. All of this bond buying program. At some point when they start tapering this off, I don't know what the general market will look at the long term yield of these government bonds. Like, who wants to buy this thing when, if you're getting a 1.5% return, and the real rate of inflation is well, for yourself, if you're in your own daily life, the rate of inflation is 15 to 20%, and if you're a more institutional style investor, even still, you're probably at like a real negative rate of 4 to 5% on holding that bond. Who's going to buy it? So nobody wants to buy government bonds. How do they raise debt? It's all from the Federal Reserve. I've had varied conversations with people about this, and there's a lot of nuances about how the government creates money. It is a very complicated thing, but no matter what, nobody wants to fund government debt right now, and they're going to be putting record amounts of it forward in the future, and at the same time that immigration is going to continue. So all this is just to say that everybody is begging for mercy here. With these real estate prices, the lack of affordability, and almost in the millennials, there's almost this kind of undertone that they're just waiting for it to crash, almost hoping for it to crash. And I, unfortunately, in the short term, it's just not. It's not in the cards right now. I would be fully transparent if it was, because we're realtors. We get paid to transact, whether the market's going up or down. As long as people are buying or selling, that's what people need to realize, is that and I think a lot of my audience has realized that I'm definitely not out to pull the wool over anybody's eyes about how I'm inferring the statistics and the data and the macro analysis of what might happen in the future here. But it's a really blurry picture. Look, if you don't own real estate right now, it's poised to inflate massively in the short term. Absolutely massively. The prices went up 100,000 from, the average price was around 500,000 to 600,000 last year in 3 months. And it's poised to do something even more ridiculous right now. That's what I'm saying, basically. So everyone's got to make their own gut decision on what they think is going to happen next and what their risk tolerance is. But like I've said many times on this channel, there's a risk in being in this market right now, and there's a massive risk also in being out of it. Because as everyone around you gets richer, or as the price of everything goes up, and all these assets inflate and you sit on the sidelines, you just become further and more deeply disenfranchised from owning Canadian assets. So that all is to say, not a very optimistic picture right now in this market. And honestly, I can't even give generalized information across the brackets of buyers, sellers, investors. It's really down to a very unique picture of what is your individual needs as a family, as an individual in society, as a partner, as a spouse. Do you need to start a family right now? Are you hoping for that? Are you in a financial position where that would be ideal for you? Are you a baby boomer and you are retired now and you're wondering, hey, yeah, I can sell this here, but I can't get anything on the other end of it. I can sell I'm empty nested in this big 2-story, but where do I go from here? I don't want to pay $700,000 for some condo when I'm not going to have the meaningful amount of money left to travel with the way the price of everything's going up. So there's a lot of nuances in every case-by-case basis right now, and all I can say is that we really have to analyze, and each individual has to analyze their situation in terms of what their absolute needs and goals and wants and resources are right now, and what trade-offs and concessions they're willing to make based on what their beliefs about what happens next here is going to be. If you want to start a family and you are just scared shitless about getting into the market right now at the top, you got to ask yourself, can you start a family in what you can get for $2,000 in rent right now in the city? And for a lot of people, I know the answer, and it's not ideal. So then you got to look at how much might prices rise in the short term here, and arguably it's an extremely disgusting amount. And then you got to look at if we have the black swan event here that rocks this market, something happens and collapses the banking system and financing stops, or for some reason immigration stops dead, or for whatever reason the government makes one wrong announcement about regulations and rules they're going to put in place to cool this thing, and it sends it too far in the wrong direction. Now, arguably, the underlying supply-demand fundamentals will not create what we saw in the 2007-2008 subprime crisis, because there was a lot more factors at play there. But we are still in a pretty precarious situation here, people being absolutely leveraged to the hilt in a way that was not unlike the subprime crisis. Now, sorry guys, the light on this video is moving on me. Sorry. So anyhow, to wrap on that, the picture is it's a very difficult market to navigate. If anybody wants to talk, we're more equipped than ever. Myself, Tamer, we've got Sean Pierce, an extremely talented buyer specialist, on the team with us now. We got an administrative staff that's extremely helpful, and really all we can do is get on the phone and talk about where you're at, what your current struggles are, what your goals are for the future, and how we think you can best navigate it. Because the answer isn't buy or sell for everybody. Some people it's a hold. Some people it's a totally different answer than what they thought it was in terms of how they basically navigate this totally financialized real estate market just to live a normal life. Some people are out there to try and absolutely capitalize on this and get rich, and the general public, though, they're more really just trying to understand what the heck is going on here, and how do they live their normal, simple life and not get totally ruined by this monster that we're dealing with, that is this Canadian real estate market. So anyhow, kind of somber message there to everybody. I'm sorry if that's not the tone that anybody wants to have on their Friday in their inbox or on their leisurely YouTube watch, but that's the reality of it. So I'm just giving it to you straight. I hope everybody is doing okay out there. And, you know, if you want to book an appointment for a consult call, guys, I'm using a link now, sort of a Calendly thing where people can populate an appointment just kind of on command without having to correspond too much. And I'll field these sort of upfront needs analysis. And then from there, sort of decide what we can, how to advise and directly what we can do for you right now, or what the long-term plan should be for you. It's a bit more of a consult call at this point for everybody, rather than just let's jump in the driver's seat and hit the road running here and start looking at houses. So I hope everybody's doing well, and thanks so much for watching. Thanks for all the support. As always, reach out to us if you need any help, and if you enjoy getting any value out of these videos, please share them to your friends and family. I hope they're helpful to everyone, and any more direct things you want to hear in the discourse, just let me know. We're here to adapt and help you out. So thanks, guys. Everybody have a great Friday, and we'll look forward to seeing you hopefully next week, because my goal is